Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. On the show today, we've been saying it in the chat, the analysts have been busy. A lot of pretty aggressive price target increases this morning. Square got one, Kohl's got one, some upgrades as well. So we'll talk those. We'll talk IBM earnings, of course. Two guests on the docket today. One of them, a local guy, Kinnard, Hockenhull. He started his very own Bitcoin exchange. It's called Bitbox. We're going to talk to him at 8:15, and then at 8:35, we are going to be joined by not Paul Uke, but one of his colleagues, Jonathan Wexler. He is a managing partner at LifeSci Advisors, another biotech expert. Joel, how's it going this morning in the S&Ps?
Nice range overnight. We have had basically a 16-point range. Pre-market low 91.75. That was a couple bucks below the low from yesterday. Pre-market 06 even, but what we are keeping an eye on is 08 to 09. Those are the last three highs, with 09 being the all-time high. So we'll see if we can bust out that into greener territory. Crude showing a little bit of weakness here in this morning's session, down 68 cents. Crude had been hanging out here in the 63 handle for quite a few days. Let's see if it finally, let's look at the daily here, and you can see few highs at 64, but looking a little heavy at 63. Not much do you see 62. And gold is ripping here, up $6.30. Another high coming up on the high of the move again, double top to contend with in gold at 1344.5, 1345. Oh, and Bitcoin, how's Bitcoin doing today? Recovered a little bit yesterday. Let me check my Bitcoin price. Bitcoin, let's see, $11,827. Good morning, Dennis, to you. Are you a little disappointed in those IBM earnings?
Yeah, definitely. I guess my slump continues even in my investment portfolio there. I had it like, when you're in a slump, you're in a slump. And I'm like, you know what? I thought about selling this into the report. I was like, if I sell, it's going up. If I don't sell, it's going down. So I lose. That's obviously not true, but that's the way you start thinking when you're in a little bit of a slump. But that's my investment portfolio. I stuck with it. So it's come back off the lows. It was really helped last night by the fast money guys and Jim Cramer, because it was trading down at 162. And the fast money guys all said buy. Then Cramer came on, special guest on fast money, and basically said buy it too. And I watched the stock go in the next 10 to 15 minutes from 162 to 164.5, just because all those guys said to buy it. So they have a lot of influence, those fast money guys. It's pulled back now. The earnings weren't actually that bad, but again, it's the victim of the same thing that's been the victim, just running up into the report. I mean, nothing ran up more really than IBM and in the report. It was up 10% this year almost. So it was a big run. So it's pulling back here. I'm sticking with it. I still think the blockchain, I think it's one of the pure blockchain plays, like a real blockchain play. And I've said that multiple times. So I'm sticking with it.
Spencer, you want to run those numbers by us?
I can do the numbers. Q4 adjusted EPS of $5.18 versus $5.17. Sales of $22.5 billion versus $22.05 billion. So they slightly beat on both those numbers. The fiscal year 18 guidance, EPS coming in a little bit light, sales coming in a little bit above the estimate. As far as Q1 guidance, that's coming in higher. The EPS estimate was $2.28. The estimate that they came out with yesterday, $2.35 to $2.48. Also on the conference call, here's a quote from the CEO. We continue to make progress in emerging areas like blockchain.
Oh, he's got the old blockchain word in there. Who's the CEO?
Throw it in there. Buzzword.
Is it?
I tell you, all they got to do is change the name to International Blockchain Machines, and I'm going to be rich.
All right. We put in a hard bottom here at 161 right after the report. That's like when you get an institution stepping up here after a precipitous fall like that. 3-15-minute lows right at 161. The recovery high just over 165. Keep an eye on 165.31. that low in the pre-market coincides with your January 5th low of 161.10. So I don't know. I think any kind of pullback, low of the day could be in this one, even though we're only $2.50. After that, psychological 160 level. And then I think I did see another low of 159.45. But when you see a chart like this and going straight up like this and a couple gaps up, shorts got to be looking at this as an opportunity to bring some in, especially if you caught it between 160 and 170. Here's a chance to break even. So I think you're going to see some buyers come in IBM.
Let's check a couple other earnings reports here and show you a couple charts as well. We're going to go to another Dow component, which is American Express. They're disappointing as well. It's been a theme this earnings season, and my buddy was just saying the play might be to short every stock in earnings because a lot of them have run up so much and they're not beating expectations. And we have seen a theme where most stocks have actually sold off so far. Most stocks have actually sold off on their earnings report. And even when their earnings are okay, they're selling off. American Express numbers, Mr. Spencer.
I mean, this is mildly embarrassing. What is the American Express ticker? I thought it was AXP.
Yeah, it is.
It is AXP. That's weird. It's not showing up in my.
I'll have it here. Just hang on.
No, I got it. I got it now. Sorry, I got it now. All right. Q4 adjusted EPS $1.58, which is a 4-cent beat. We have sales net of interest expenses at $8.8 billion versus an $8.72 billion estimate. So they beat on the EPS. They beat on the sales number. Fiscal year EPS guidance coming in line, $7.04 was the estimate, and $6.90 to $7.30 was the guidance from yesterday. So right in line there as far as Q4, as far as fiscal year EPS guidance.
They did say something about suspending the buyback, though, didn't they? Do you have that?
I'm looking.
I thought I saw something like that.
I'm looking in a different spot in Pro because for some reason
maybe I dreamt it up. Sometimes you dream these things up in your sleep, but I was pretty sure I read that somewhere when I was looking at the report. Joel, show us a chart. Let's break down the technicals.
Oh, that's right. Wait, I got it. There we go. They're suspending their share buyback for the first half of the year due to the upfront charge tax.
I don't think the market liked that either. So a couple of reasons the stock is trading down here, breaking through the $100 psychological support. Can we see that chart, Spencer?
Yes, we can. I'm pulling it up right now.
Bringing it up.
Well, first of all, I'd like to welcome Ron Bird here, who's listening to the show from Colombia. So we got a Colombian listener there. How you doing, Ron Bird? Let us know if there's any questions you have. They hit AXP under $97. Our pre-market low stands at 96.89. Getting a little bit of a bounce, but nothing to write home about. Couldn't clear 98. So there's your early ranges for the pre-market trading, 96.89, and then a triple top basis the 15-minute chart, just under 98. So we'll keep an eye on those levels as well. Let's take a look at the daily chart. This one had a nice run into the report. Well, everything's had a nice run. So let's bring up your daily chart. Just kind of bunching up there. In order to fill the gap from yesterday, you need to get to 99.58. Looking for some support here. I see a trio lows at 98. We've taken that out. 97.44 if you're looking for a target under that pre-market low.
Slumberger, you like to call it, Joel. SLB reported earnings here this morning. It's getting hit a little bit too. Again, another one that ran up significantly into the report. If we look at Schlumberger, it was $62.25 1 month ago. Now over 76 bucks. So you're talking about a 14-point run on a $62 stock. Oil has been okay during that time frame. Not nearly as hot as Schlumberger, though. That's a big move.
Schlumberger Q4 adjusted EPS 48 cents, which is a 4-cent beat on the estimate sales of $8.2 versus $8.13 billion. So they beat the estimate on both the EPS and the sales.
Not good enough because it's just run into the report. Now, it has come back from the lows, though, because I saw Schlumberger trading down in the 75 handle. We're back in the 76 handle, flirting with settlement there. Thoughts on this one, Joel?
Yeah, those spotty trades down in the lower 75 handle, not enough, really a lot of volume to validate that low. What a late starter this one with the oil rally. Actually, I was talking about this with the chief on on Stocks and Jocks, and he was mirrored down here, and he was like, market's moving, everything's moving, my Schlumberger won't move. And I just said, hey, you know, if it cuts through that double bottom in 61, stick with it. So very nice move. Just a little bit leery here because straight up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, a stock can't go up for more than 8 days in a row. Now you're breaking that.
That's Joel's rule.
Yeah. Now you're breaking that support at yesterday's low 75.69, but trying to get green. I mean, I don't know. I just think after this kind of run, not the greatest report in the world, there'll be a battle at unchanged. If it goes unchanged, you know, we got some major resistance up to the 77 handle. If the downside pressure continues, you do have a low at 75 even, as well as 74.56.
Let's quickly just cover a couple of ratings before our first guest. There's a lot to cover in ratings land. Those analysts have come out of their slumber, and they are coming out with a lot of different ratings here this morning. Let's go to two that aren't actual ratings changes, but price target raises. And I'm going to go to Square first, SQ, because this stock is hot here this morning. We got Namira raising the price target to $64. Assuming that might be a street high there, Spencer, because this is a big price target there on this $40 stock. They were actually in the report comparing it to the early days of Amazon. So they are very bullish, Square, SQ. Stock trading up 4% in the pre-market, kick-starting it here this morning.
Well, just looking in the pro quickly on our Square ratings page, and yeah, that is most definitely a street high price target.
It's hot, and right, at least this morning. And you know what? It's come back from those lows. It held that 35 area. It tested it multiple times in December. That was the area it needed to hold. It did do that. And then it had the little run up, a little pull back, now a little consolidation around 40, and now it gets kickstarted again. This thing gets up over $43. It starts to open up. So I kind of like the Square chart here.
41, 81, 82 is your last take, trading up $1.55. Let's look at the pre-market action here to get your pre-market high and pre-market low. Your pre-market high is over $42 at $42.15. They're slinging some volume around in this one. Current trade to 41.83. Dennis mentioned a great number up there, and that's I believe 43.05, and that was that little blip that you had. 43.08 to be exact on January 11th. Let's see where the 50% is on this. We almost 49.55 to 35. Boom, boom. 14.7. 42. 42 is going to be hanging out. It's going to be at your high for now. But best thing for this is get a close above 42. We'll go back up to new highs. Spencer?
Quickly in the next 30 seconds.
30 seconds.
KSS is up $2 here this morning. Jefferies raising their price target to guess.
You said that on the pre-market show, and I said 100, and I was just joking.
And you were guessing right. $100. $100 on Kohl's. The brick and mortar is back, apparently. Anyways, this has been an incredible run for Kohl's. Everybody had it written off, like every brick and mortar retailer in early November. This has got to be one of the best stocks in the last 2 months because it got down to $37.97. So $38. It's now trading $67 here this morning. You're talking about a stock that has almost doubled in 2 months. Incredible move for KSS. Now they're saying it could go to $100. So brick and mortar is back, apparently.
My worst call of the year, retail. You know, after that run up, I thought it would pull back. Anyways, I
thought it was going to pull back too. I thought it was overdone. Well, it just keeps running.
67.63. That's your pre-market high. That's a big move up $2. I got to just look at the monthly on this, Dennis. Did you say an all-time high? No, we got some.
No, I'm saying it's getting up in that ballpark though. We're getting back up towards those 70s. All-time high on this one I got is 73.61.
I got a higher than that. I got an all-time high of 79.55 back in April.
When was that?
April 2007.
Yeah, you went back more than 10 years. I only have a 10-year chart on there.
Okay. So. Dennis doesn't want to pay for the extra data. Okay.
All right, it's 8:15. We're going to go grab our first guest, founder of a Bitcoin exchange called Bitbox, Kinnard Hockenhull. Will be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. We're on the line with Kinnard, Hockenhull, local Bitcoin investor, trader, made good. He runs bitbox.com. Kinnard, how's it going today?
Very good. How about you?
Doing well. And Joel, I think wanted to get you on because he heard about the Bitcoin, the local Bitcoin investor, and he wanted to talk to you about Bitcoin.
Bitcoin investor, educator. Can I just real quick? We had our discussion yesterday, which I wish we could have shared with everybody. But like, how'd you get started in this? Like, where did the ideas come from?
Yeah, so my story starts a little bit before Bitcoin actually emerged. So in 2008, I grew up in the trade. And in 2008, my family's home was foreclosed on, and that was my senior year in high school. So after that, I took a year off, a gap year, and went to West Africa. And I was in West Africa while the sort of height of the financial crisis was happening, and it was sort of a good time for me to contemplate and see that there's this disparity between like the real economy and the financial economy. And I came back to Detroit, and I interned at a wealth management firm. It was my job to research the financial crisis so that I could help my boss appear knowledgeable to his clients. And what I sort of took away from that experience was that a lot of people point a lot of different fingers at a lot of different places, at irresponsible borrowers, irresponsible lenders, but no one really looks down at the foundation, at the monetary system itself, and says maybe that's the problem. Fast forward a few years, I found out about Bitcoin. A friend of mine explained it to me, and the rest was sort of history. And I started a retail exchange while I was a student at the University of Michigan on campus, where I built a simple site, and you could go and type in how much Bitcoin you wanted, and I would run and meet you and take your cash and send you Bitcoin. And that wasn't scalable, so I ended up joining forces with another company with an electronic exchange, and we ended up getting accepted to an accelerator out in Silicon Valley. And And so my company, Bitbox.
Go into your philosophy here. You studied the financial crisis, right? And you said, hey, it's maybe not, the people buying the houses, maybe it's not the lenders, where's the philosophy behind this to, turn to an alternative currency?
Right. So I think there are a lot of components, and what I always emphasize is people understanding Bitcoin, cryptocurrency, and blockchain technology, not just as an investment opportunity or just as a technology, but as a movement. And that's because that's where they are best enabled to actually make investment choices. And what that really means is hard to convey succinctly, because there are so many parts of it and so many potential applications. But a good way to think about it is that this is a technology that really implements new rights and software. And if you think about it, like having the right to transact privately, if that's something that is something that people value, then it's worth, throwing some money at, right? If that's a right that's worth fighting for, then definitely throw some money at it.
So what do you say to someone like Dennis, who says, I can't trade this thing. It has no fundamental value, it has no backing. What do you say to a person that just says, I'm not going to invest in this? I can invest in the stock. I can look at the balance sheet. I can look at earnings. I can look at analysts. It's
not, and I just interrupt you because it's making my point. It's not that, and I've said this on my show for a long time, it's not that it has no fundamental value. It's that it is almost impossible to figure out what that intrinsic value would be. I'm a chartered financial analyst, and I go right back, to my investing philosophies where, I can look at the balance sheet, I can look at cash flow statements, I can look at what the company's earnings, dividends, there's different things. With Bitcoin, I don't have any of that. So it's very difficult for me to just say, hey, it's worth $100,000 or it's worth nothing. It's difficult to come up with an intrinsic value for it. And that's why it's so difficult, I think, for the big money to come into this, because they can't crunch numbers and come up with a value.
Right. Well, I guess what I would say is that, one, I think when people, ask the question, what gives Bitcoin value? A lot of times you might hear people say, well, it's not backed by anything. I think they're actually being offered an opportunity to reevaluate what value really means. And going back to what I said earlier about, understanding it as a movement, I think what we have is an opportunity to sort of bring our systems of value more in line with our actual values. And so in life, we kind of live with and accept this dichotomy where, our value systems are out of whack with our actual values. And so there's an opportunity here to change that. And then in another way, on another level, you have a lot of numbers that you can start to work with in order to see, where it might end up. And this is something that people, realize from the very beginning. If you calculate the amount of household wealth in the world, and you look at the number of Bitcoin that are meant to be in existence, and if you go ahead and presume that Bitcoin will end up being the global currency, then I think one of the people who were active early on in the space came up with a valuation of 10 million based on something like that. And you can look at other numbers like the number of merchants accepting Bitcoin, and the different components of supply and demand. You can look at the rate at which new Bitcoin are entering the economy through mining, and then also look at the rate at which people are spending Bitcoin and the places where they can spend it, and the growth and things like that, merchant acceptance. So there are ways that you can start to put numbers on it. But I think you also don't want to walk away from that, grappling with that key question of really what is value, right? Like, why does the US dollar have value?
Well, the US dollar has value because everybody uses it. So if you think eventually Bitcoin is going to become the world's currency, it's probably going to be a lot more than it is today. I think it's very, that's a question, because now you've got, even if you believe in digital currencies, there's 1,300 other of these things competing with Bitcoin now. Now, Bitcoin was the first one. It's got the best name of them all. But, from a market cap perspective, Ripple's catching up. You've obviously got Litecoin in the mix here, Ethereum. What's to say that one of those other currencies doesn't become the world currency instead of Bitcoin?
I tend to think that things will sort of end up panning out on the basis of network effects. And for anyone who's looking for some math to keep them busy, you can look at Metcalfe's law and Reed's law. And this is something that the Valley has sort of been obsessed with. And that's got a lot to do with how we look at social networks and why we end up with one really big social network instead of, a number of social networks for a given purpose. And I think what we can expect to happen is that there will be most likely a large dominant currency for the world. And then there will also be some other currencies, but there are a lot of possibilities. We could end up with a situation where there are different apex species for different ecosystems, right? Maybe the shark or the dolphin is the apex species in the ocean, but on land the lion is the apex species. So not these systems are not all the same. They don't all have the same properties and applications. So that's another thing to consider. They're not quite apples to apples. And Ripple in particular is not actually blockchain based, is really comes from a different place than the currencies which are descendants of Bitcoin. And so that's a whole nother vector in all of what's happening.
Kinnard, tell us about Bitbox.
So Bitbox is an educational company. We started on Ann Arbor's campus, as I mentioned earlier, and we've sort of had multiple lives like many startups. Right now, we are doing 3-day intensive educational workshops. The idea is to take people from zero to blockchain hero in 3 days. That's what we like to say. But yeah, so it sort of emphasizes what I spoke on earlier, that people should understand what's happening, not just as an investment opportunity or as a technology, but as a movement. And that in turn actually best empowers them to actually make the decisions about what to invest themselves in. So right now we are running camps around the United States, and really excited to be able to take this movement to as many people as possible.
And there's one in the Motor City here, right? And I believe that's on Tuesday?
That's correct. It is not this Tuesday, but next Tuesday.
A couple more questions for you, Kinnard. When did you make your first investment in Bitcoin?
So I first bought Bitcoin in the summer of 2012. I think it was around $7 I bought in Tel Aviv, actually.
And are you pairing out or are you holding on? And then also the final question, when I spoke to you yesterday, you said you paid your rent in Bitcoin. How did you do that?
Yeah, that's correct. I am holding on and looking forward to earning more Bitcoin, in fact. And yeah, that's correct. I paid my rent in Bitcoin, and it's not just me. A few other people in my neighborhood are paying the rent in Bitcoin, and it's pretty straightforward. You know, it's like it's a lot of people say it's to money what email was to letters. People before the internet, people used to write letters, and then the internet came out and email came out. Now they don't really do that quite so much, and sending Bitcoin is as simple as typing in the address and clicking send, and the amount, of course. No blank checks.
No, Chad, don't need a checking account. So, all right. Well, Kinnard Hockenhull, he's the founder at Bitbox, a believer in the cryptocurrency, not only as a method of exchange, but I guess as a new value system or a new way to evaluate this crazy world that we live in. Kinnard, it was great speaking to you. We'll meet you next week. Thanks for your insight.
Okay. Thank you very much.
All right. Here we are back. Let's get the S&Ps back up here and see what's going on in this market. We got Coles trading up 215. SPOO's pulling back a little bit. Seesaw session now back under 20. Back under 2,800, 2799.75. Dennis, did we have any selling balances there maybe to take us off those highs?
Well, remember it's option expiration. So yeah, we are seeing a little bit of pressure. GE just posted 356,000 to sell. Morgan Stanley 157,000 to sell. Again, with option expiration, third Friday of the month, these imbalances tend to be very volatile, and you can't put a lot of weight into them. It's the only day of the month where the pre-market imbalances don't usually mean that much, although sometimes it's because they flip. So you want to look at them at the last minute, like a 9:29 or 9:30 when the institutions come in right at the last second. And that's the main reason is there's just so much institutional order flow that comes in on the open on the third Friday of the month that, you know, if you see a 300,000 share G selling bounce, somebody might just say, I got $1 million to buy at the last second, and then it'll flip to 700,000 to buy. So a lot of institutional action will make those volatile. As of right now, it's looking a little bit weaker, but mixed. I'm still seeing some buy imbalances too. Bank of America, 282,000 shares to buy, so that's significant on the upside. Square is also 32,000 to buy. We know Square is higher because of that $64 price target that Amira put on it. Just looking here, you're right. S&Ps are volatile. They're trying to figure out what's, where they want to go here too. It has been a volatile session. We've had some mixed earnings reports here. I mean, IBM and American Express obviously putting some pressure on the Dow itself with two major components. If you look at the DIA, it's actually trading in the red a little more significantly because of that weighting from IBM and American Express. But it's mixed right now, very mixed market, and these are tricky to trade sometimes. I'm trying to look for themes, something to look for.
It's tough.
This day is a tough day. You always look at themes, and when I come in the morning, first thing I look a lot of times is the TLT. And when I see the TLT very weak, I think financials might be strong. Well, TLT is flat, so I'm getting no indication there whatsoever. I go to oil. Well, oil is down a little bit, so you can think oil stocks are probably going to be a little bit weaker chasing that. So that's one theme this morning because we're down about 1% on the USO. But really overall here, I'm seeing some of the consumer discretionary stuff is strong. Obviously, we've got some analyst action, which is pushing up some of the retailers. Kohl's, for instance. One chart we haven't looked at for a while, and which I think is setting up well, especially considering how hot some of these retail and box stores have been, is Macy's. Check out the M chart. It's been consolidating here for the better part of a month and a half, around $26. It looks like if it could get above that high at 27.43, it could be off to the races to $30 here. So Macy's is one that's been a laggard, obviously compared to some of these other ones here, but it kind of looks like it wants to go. I'll call it itchy.
Look at that. Yeah. And a nice gap fill here. Dennis, I think a Canadian guy here is, he's talking to you about valuing cryptos is as difficult as currencies. I don't know if you could see that in the chat there, if you wanted to respond to that, talking about the value of the.
I've talked about this before, and and I've had this argument when I posted on Twitter is that how do you value it? And people say, well, fiat currencies are just paper money too. But they're backed by their governments. So yeah, when you want to talk Venezuelan currencies or some of these smaller countries, I think that might be the place where some of these cryptocurrencies could help. When I look at the US dollar, you've got the US government backing it. And when you look at like something like the Canadian dollar, there's lots of different ways to value the Canadian dollar. It's a Canadian currency, so you're going to look at the Canadian economy. You're going to look at, what is, the major export market look like in Canada. What's oil, because we have so much, I think 29% of the Canadian economy is related to oil. So, how's the oil doing? It's an oil currency. When oil is going down, the Canadian dollar typically is showing weakness. When oil is going up, the Canadian dollar typically is showing strength. There's a lot of other factors that influence that price. You can't do that with Bitcoin, because it doesn't have an economy behind it, doesn't have a government behind it. It's the world's currency. Well, how do you value the world? If you say it's the world's currency, you're going to become the world's currency. I think, though, I think there's a good argument to be made that in some of these smaller countries where the currencies are very volatile, where, you've got, hyperinflation, as somebody was saying in the chat, I think there's an argument to be made there where maybe they do need some type of, different way of transferring value or making transactions, and maybe that's where one of these currencies steps up and replaces those smaller currencies. But again, we're early here, and to say it's going to be Bitcoin is difficult because we've got a lot of other ones stepping up here now too. Some of these might be better systems. So even if you believe in digital currencies, how do we know Bitcoin is the one that's going to win at the end of the day? If we go back to the internet bubble in 1999, obviously, you looked at a lot of different companies that, had, websites and were selling stuff. How do we know that the online bookstore, which, was just selling books, how do we know that was going to become, Amazon is
the whole
today?
Economy. Yep.
It's very difficult, to see, between 1,300 currencies now to choose from, and which one's going to emerge as the victor. So you can say Bitcoin is leading right now, but we don't know they're going to win the race. And that's if you believe in, the digital currencies altogether. I'm not sure I'm a full believer. I don't know if there's a need for it in the U.S. and Canada. Some people say I'm nuts because, the U.S. is, just fiat currency too. But I think, from a transactional perspective, the U.S. dollar works pretty well.
All right, real quick, just for Dr. J, I didn't want to, he's asking about Abercrombie and Fitch here. This thing's trading up on very, very light volume, Dr. J. But boy, you got a big, big level to keep an eye on here in the dailies. You had a high 1958. You also had a high in that area, 1951. And you got a gap fill all the way up to the $22 level. So I don't like that it's up on light volume. Retailers are hot though, but that as Dennis would say, that one's looking itchy. All right, we're running a little late here for our second
okay,
guest.
and Dennis, I don't know if they teach you this in Canada, but the U.S. dollar is actually made out of cotton, not paper. but I don't know if you can do that. All right, we're late for our next guest. 8:38. We're going to grab Jonathan Wexler from LifeSci Partners, and we'll be right back. And welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. We're on the line now with a new guest, Jonathan Wexler. Actually, not new because you were on with Paul last time he was on, but Jonathan Wexler, Managing Director at LifeSci Advisors. John, how's it going today?
Going well, Spencer. Thank you so much for having me.
Thanks so much for joining us this morning. So you guys, LifeSci Advisors and LifeSci Index Partners, you guys run a couple of ETFs. I have one of them up on the screen. BBP is one, and the other is BBC. Real quick, you guys are in the biotech space. I want to ask you about the year that biotechs had in 2017. It was I forget what I read, a 29-year high in terms of the number of drug approvals. I don't remember if that's the exact number or not, but a ridiculous year-over-year growth in terms of the number of drug approvals by the FDA. Can you just kind of digest that for us?
Sure. So last year was the highest year in about 30 years in terms of drug approvals. The FDA has been increasingly constructive on looking at the assets in biotech and coming to a decision whether it's negative or positive quickly and a lot faster than we've seen in the past. As far as growth in the sector, our sector grew median revenue by about 23% year over year. The way that we can figure that out is that every company in BBP has an approved drug, so the median revenue of that index is sufficiently accurate. So as far as the returns of the space last year, when you have a sector that's growing at over 20% revenue year over year, you're probably going to have a pretty well-performing sector, right?
So then what are your expectations for 2018, just in terms of the FDA and drug approvals?
Sure. So a lot of the drugs that were late stage development, meaning that they had already passed a phase 3 and were going in front of the FDA with their NDA, their new drug application, a lot of them moved through the pipe in 2017. However, in 2018, we're going to be seeing a lot more kind of specialty drugs, maybe orphan or ultra orphan drugs and designations. We also just came back from the JP Morgan Healthcare Conference in San Francisco last week, at which our company set up 2,850 meetings over the course of 3 days. So there was a ton of activity there, and we saw a lot of improvements and really great data coming out of some of the more esoteric areas of biotech like gene therapy. So even though those are not going to be coming in front of the FDA this year, we still think that they will be constructive and that the bar for FDA approval may be going down.
All right. What about the recent consolidation? Gilead kicked things off. You get things going with Juno here. Hearing a lot of different speculation about a price. Nothing's come to fruition yet. What do you think about the possible consolidation here, and any smaller companies you're keeping your eye on?
Sure, that's a great question. So the Gilead acquisition of Kite was really a game changer in our space last year. It was the only acquisition of a public pre-commercial biotech company that we measure by tracking our ETF BBC, which owns every single biotech company without an approved drug. It was the only acquisition of the year. But furthermore, Gilead has always been a liver company, and they've always specialized in the liver. Remember, they started with Tamiflu, then they moved on to HIV, AIDS, and then they cured hepatitis C. So for them to move into oncology is really groundbreaking for them. And the reason that they did so is because this whole technology of taking somebody's white blood cells out, re-engineering them to kill cancer, injecting them back into their body, has proven really effective. I mean, the cure rates, at least measured within the first 6 months of treatment, have been around 80%. And these are patients that are literally about to die that have exhausted all options. So as far as consolidation in that space makes sense, it really does. And as far as Celgene buying Juno, the Wall Street Journal reported that that was going to happen. And then the following day, on Wednesday, they said, be cautious about it, which, we didn't really know how to take that. Never really see the Wall Street Journal come out and say this is going to happen. And then the next day say, wait, hold up a second, it might not. Right. But as far as their relationship, Celgene and Juno have always had a partnership. Celgene actually owns the right to purchase Juno between $80 and $90 a share. I'm not sure where in there, but I know that 90 is the top. So they've always been partnered on these assets. And if you remember correctly, Juno had some patient deaths in their earlier trials. The FDA nixed those trials. They moved back to a phase 1 pivotal trial. So if the trial works, the drug will be approved. The other two players in the space, which are Novartis and Kite, have recently got approved. It makes sense. And the really important thing to take away from all of this is that these are curative cancer therapies that are used on patients that have no chance. And so the FDA has basically spoken and said, if you can do anything for these patients, do so. And if you can cure them, more power to you.
Help me out here. Doesn't Biogen have a similar kind of agreement with another company? I remember this was a couple years ago that they purchased a right to own the company, and was it just like an extraordinary price? Or maybe this is what I'm thinking about with Juno and Celgene, with Biogen going a few years back. And if not, just can you give us some comments on Biogen?
Sure. So I'm not familiar with Biogen having done that. They may very well have. I'm personally not familiar with that. I know that a couple of years ago, when Celgene did this with Juno, it was really, really big news. And Celgene also partnered up with Bluebird to a large extent, which was also big news and really the reason for the run up in the stock in 2014-15, right? So I'm not sure too much about Biogen. I do know that Biogen as a whole is kind of shifting their entire valuation / business model from a value to a growth company, right? They're looking at pending patent drops for their major multiple sclerosis assets. However, their new drug, nusinersen, that they're partnered with Ionis on, is absolutely incredible for spinal muscular atrophy. The sales that they did were, blew all estimates out of the park. And so from a really, from an investing perspective, you look at them and you say, well, look, all of their revenue has come from multiple sclerosis with Tecfidera and Tysabri. They're going to be moving to new indications. Alzheimer's, they never really had good data in. They're pursuing it really strongly, but they also have a robust balance sheet. And so we're hoping, at least we at LifeSci are hoping, that they're going to be hopefully growing more than the organic way. They might hopefully be buying some companies and trying to expand their pipeline out like that.
Let's go a little macro here. Not much going on in Washington with the new healthcare that got the tax bill through here. Any hiccups coming from, the government and the administration, any regulatory, there was a lot of drugs approved last year. Do you see any regulatory hurdles, confronting this sector in 2018?
We sure hope not, right, Joel?
Yeah.
So, we hope not. We always plan for the worst. We hope for the best. However, I really don't think that that's going to be the case. When the election happened and the entire administration switched over, they were talking about speeding up the process for biotech drug approval. And so right now, as I'm sure that Paul has spoken with everybody about, it takes about 13 years for a molecule to go from inception to approval. About 1 out of 30 drugs actually make it that far, and the average cost is over $1 billion per drug, right? So our position has always been, if you want to shrink that timeline from, call it 15 to 5 years, and you want to shrink the cost of developing those drugs from $1.5 billion to $500 million, are we prepared to accept a price that's 1/3 of the current price of drugs? And the answer has always been absolutely. So I think that if the FDA is more constructive, shrinks the timeline, they shrink the timeline, that shrinks the amount of money invested in the asset, we're going to be able to see meaningful price reform from an organic, genuine perspective, rather than the current mess that a lot of companies feel that we're in.
Jonathan, question from our chat here has been, there's a lot of names worth knowing in this sector. Can you give us some of your favorites?
Sure. That's a pretty open-ended question. I love a lot of companies. They've all had a pretty significant run-up over the last few months, as everybody is aware of, I'm sure. I look at really micro-cap companies, so I'm not sure as to the risk tolerance or investment objectives that your listeners have. But there are a couple companies that I really like. I really like a company called HTG Molecular. They're trading at $3 right now. They just did a massive secondary that was priced last night. I like them because they're a diagnostic company, which is an area of the market that's always looked over. Diagnostics have always been a very difficult business to invest in. However, these guys have partnerships with Merck, Bristol Myers, Illumina, QIAGEN, GlaxoSmithKline. They're the only diagnostic allowed to be used in Opdivo trials, which is the largest drug of Bristol Myers', and they just signed a deal with Merck to do their, ideally, Keytruda trials. Company is going to have over $30 million of revenue. It's going to be trading at an $80 million market cap after this deal prices. So I think that they're a really good bet. On the therapeutic side, I love a company called CBio. It's CBIO. They're a hemophilia company. They've basically developed a drug that is able to be administered subcutaneously, which is an injection under the skin like a diabetic needle, rather than an IV formulation. Right now, the leader in hemophilia B is a drug called Benefix, did $720 million in sales by Pfizer last year. It's administered IV 3 times a week. Issue with hemophilia is that when kids are born, they have to start taking the drug immediately. And around the age of 6 or 7, they don't really have many veins left to hit. And it's a real problem. So if you're able to inject under the skin rather than going mainline, it's a lot better of a situation. Data's coming out in a couple of weeks. We're positive on it. Company has a market cap of $100 million. Again, their competitor does $700 million in sales a year. This is a phase 1/2 trial, but there should be a correlation. And if it's positive, I think that this could be a really interesting name to own. On the large cap side, I think I still like Gilead and Amgen the most out of the big four. A lot of good things have been coming out of Alexion. They've been moving around, trying to diversify their portfolio. They have some readouts coming this year as well, outside of Soliris. Celgene, not too confident on. I feel like they've been making a lot of acquisitions. They did a deal at JP Morgan, the biggest and really only deal that was done. They bought a private company, which was not, we would have preferred it would be a public company, obviously, but not too sure about the economics and the situation of that drug. So I hope that was a good sense of where we're at.
No, that was great. Just real quick, this whole Merck, Bristol Myers, Keytruda thing, it goes back and forth. I mean, do you see any resolution coming to that soon, or, are you taking a side on this one, Merck or Bristol Myers?
That's a great question. So, they both have their places, and they both have the same kind of method of action, right? Mechanism of action. They both have shown different abilities of different levels of effectiveness in different indications and cancers. So I can't say that one is better than the other. They both have their places. They both have a side effect profile that's differentiated. They both work. And so all around the country, I go and speak with people and advisors and family offices, and everybody knows somebody that has been diagnosed with cancer that's taken either Opdivo or Keytruda and had a complete response. It's actually, it's really cool because it's something that a lot of people have been exposed to. And it's really cool because so many people know people that have been helped by these drugs, that they've not only created brand name recognition, but they've also, lit a fire under people and gotten people interested in biotech because they've seen the results and they've seen people that were about to die no longer having cancer. So a lot of people are more interested in our space than ever before. As far as one over the other, I know that Opdivo comprises an extremely significant portion of Bristol Myers' valuation, whereas Keytruda is less so in Merck because Merck has a much more diversified portfolio. Bristol Myers really relies on Opdivo and their other drug, Yervoy, ipilimumab. So from a risk perspective, I think that I would rather bet on Merck because they're much more diversified, and Bristol Myers is too concentrated. Hopefully Bristol Myers uses some of the about $11.7 billion that they repatriated at the end of last year to acquire some other companies.
Excellent breakdown. Jonathan Wexler, Managing Director of LifeSci Advisors. I mean, you and Paul, you guys are incredible. Thanks for coming on. We'll get you, one of you or both of you, back on again soon. Have a great day.
Thank you, Joel Spencer. Have a great day.
All right, back to the markets here. About 5 minutes before the end of the show here. S&P's back under 2,800. That seems to be the battleground here, Dennis. We're trading up 275, 250 at 99 even, dancing around 2,800. I mentioned the triple top up there from 2,808 to 2,809. That's your big number on the upside, big number on the downside. I go with that pre-market low. It's only a couple bucks below your low from Thursday. Dennis, what are you seeing out there in the markets?
They're flipping around. The imbalances are flipping around. They were all sell, and now they went to buy, and it is dragging the S&P futures along with it too. I mean, anybody, and I've seen this said multiple times, there's a lot of believers out there that the S&P futures, they believe that they lead stocks no matter what. And I will tell you from my experience, it goes both ways. Sometimes the S&P futures are leading, sometimes the stocks are leading. On the third Friday of the month, the S&P futures almost always are just following what the stocks are going to do because they're going to be wild. So when all those sell imbalances came out, the S&P futures dumped 4 points right there. Now they've all flipped back to buy imbalances and the S&P futures rally. That is not a coincidence. There's obviously, algorithms that are tracking this, and as the stocks look like they're going to open higher, they're going to buy S&P futures. As the stocks look like they're going to open lower, they're going to sell S&P futures. So you're seeing it whipsaw around again because, the indications here, it's a very mixed market today. I can't figure out where we're going to open down, up or down either here. So, just, 2 minutes ago, everything was looking very, very weak. You actually saw a lot of stocks sell off because there was so many large sell imbalances. But now that they've all flipped to buy, now the market's starting to show some life here again. So it's going to be 929.59 when we finally find out, whether we're going to open up or down. Now, obviously, individual stock news is going to affect a lot of stocks. We touched on a couple of ratings earlier, but there was a lot more to touch on as well. Maybe we should take the next couple of minutes just to run down. Spencer, can you just run down the main ones from your list? Because there's about 25 or 30, but there's about 6 or 7 that really jump out at you.
Yeah, here, let me pull up my list from Benzinga Pro right now. So those two price targets that we discussed earlier, those were big this morning. The Coles and the Square. We also had what did let's see. Chevron caught a downgrade this morning from HSBC, buy to hold. That caught my eye. Let me make sure I have. Today is the 18th, correct? Yes. Okay. I'm not crazy.
19th.
Oh, I'm looking at my wrong day. All right.
That'll get you.
Why don't you tell me what crossed your eye, and then I'll tell you what crossed my eye after
Raymond James here. So we got Chipotle, which actually was trading significantly higher in the pre-market, but actually has come all the way back in. Sometimes you get opportunities where a stock is downgraded or upgraded, and sometimes because on this third Friday of the month there's so much institutional action, sometimes you have an upgraded stock that'll actually open down. Sometimes it's a pretty good opportunity to get on a good price. I mean, CMG just 20 minutes ago or an hour ago was trading up at 343 because of the upgrade. Now it's trading back down, just trade at 348 and a quarter or 338 and a quarter. So giving back a lot of the games again because we're getting these imbalances bouncing all over the place. We had Jack in the Box, JACK, that's trading up significantly. Goldman Sachs upgrading that to a buy this morning. We've got Nike upgraded at Wedbush. That is also up significantly as well. Keep an eye on that 65 number. That's been like a big resistance point, just above 65. You can see all those highs. So you're kind of opening into resistance there. So that's an interesting setup as well. Philip Morris, PM and MO, both catching upgrades at Jefferies. Both of those trading significantly higher here in the pre-market. Abercrombie and Fitch, ANF is getting upgraded at Argus. We got Sirius Satellite Radio, if you like the little price stocks. SIRI is catching an upgrade at Deutsche Bank here this morning. So you got a lot of analyst actions, a lot of smaller ones as well. Any charts that jump out at you, Joel, that you wanted to jump into?
Well, just that ANF that we talked about with Jazz, Doug getting the upgrade, trading 1935. We did get a little bit of a higher print, but this one, not sure how influential Argus is in the sector, but all you need to do is look at that daily chart, or even go a little bit. Let's get a little bit longer term perspective on it, and go to your weekly here. And you have this big red bar at the end, when you actually, there was a daily gap there, but that looks itchy. Trying to clear at 1960. That's a big number in ANF. And, Dennis, you made the comment about, the S&Ps leading the stocks, or stocks leading the S&Ps. The S&Ps don't need the stocks to be open, Dennis. They start trading at 6 o'clock at night, and the stocks are open till 8. So all that activity between 8 and 4,
it's just S&Ps. That's when they're running their own. Yep. And that's why they do. And if you're looking at that, obviously they're leading in that case because the S&P futures trading up, then it drags the stocks up. That's why I made the point that it flips back and forth. But when you get to these certain times, there is certain time, like there is avid believers, I'm telling you, Joel, that just say S&P futures lead no matter what. I don't even know why you look at stocks. I'll tell you this is why I look at stocks, because that is just not true. There is sometimes that the stocks will lead the S&P futures. I'll tell you this is going to be one of those days. If we're at 929.59 with 1 second to go and everything flips to a huge sell imbalance, you will see the S&P futures just tank on that information there. Right now, they're big buy imbalances. That's why the S&P futures are coming back. So it's definitely the stocks leading right now. You're absolutely correct. Between 8 p.m. and 4 a.m., there's nothing else trading out there, besides the overseas markets, but the U.S. markets and stocks are closed. So that is the only thing to trade. So when you open at 4 a.m., it is definitely the futures that have led the stocks. If the futures are trading up 20, everybody's coming in there to buy the stocks. So, these are interchangeable stuff. The ARB goes back and forth. So obviously you've got the S&P futures, which are made up of the 500, stocks. So those 500 stocks will try to play catch up when they've been closed. So that's kind of how it works.
All right. Spencer?
Dennis, can you actually give us an update on the imbalances in terms of what?
They're all buy imbalances right now. So at 850, when we had our last guest on, they were all huge sell. Now they're all huge buy. Bank of America, 995,000 to buy. Citigroup, 203,000 to buy. Coke and Procter Gamble, 192,000 to buy. Coke, 246,000 to buy. They're all big buy imbalances right now. Again, though, this information is going to change as it continues to go. 901, it's going to be more institutions that come in. So some of these orders are going to get offset.
And then as far as ratings, you running through your list, there's a couple more. I want to make sure we got Chipotle, Ray J, not sure if you said that. They upgraded. Yep. Okay. We got, you mentioned Abercrombie and Nike, called the upgrade from Wedbush. And then as far as downgrades go, I didn't see a ton of notable downgrades this morning. Actually, there really wasn't any downgrades worth noting. I guess it's we're buying everything. And then you mentioned the Jack in the Box upgrade. They approached the CFO from Papa John's, so that could be that could have something to do with that. But anyway, that's it for us today, folks, and I guess for the week since it's Friday. So if you want to catch any part of today's show again, any part of any show this week or this month or this year or the past several years, you can catch the podcast, which is on iTunes, SoundCloud, and Stitcher, or go to youtube.com/Benzinga TV. Thanks to our guests, Kinnard, Hockenhull, and Jonathan Wexler for joining us today. Thanks to all those of you who joined us in our chat, premarket.benzinga.com. and on our YouTube channel as well, youtube.com/Benzinga TV. Joel, you have one more thing you want to say?
And what about it 9:45 Eastern Standard Time on the TDA network?
Almost forgot. 9:45 on the TDA network. Our own Brent Slava, head of our news desk, will be on that. If you use TDA or Thinkorswim and you want to catch the head of the Benzinga Pro News Desk on at 9:45, you can do that. He'll be talking about the regional bank earnings, which we did not discuss at all on today's show. So he'll be doing that at 9:45 on the TDA network. But that's
interesting blockchain. Just before I let you go, interesting blockchain headline that just broke at 9 o'clock. The government of Canada exploring the potential of blockchain technology. That's an interesting headline. Bullish. Government of Canada. So obviously, I don't know how that impacts stocks, but you can see that this,
I'm bullish.
Canada's waking up, man.
Even governments are looking at this now.
All right, I'm bullish everything now.
Bullish everything Canada.
Bullish everything. All right, have a good one, folks. We'll see you guys on Monday. Have a good weekend.